Hey all, welcome to ShareTreck. This is Raj here, friends. Today I want to talk to you briefly about Illumina. I'm looking at the Illumina share price and I'm looking at potential catalysts. And it seems to me that Illumina is likely to consolidate for a while. And I'll also give you an idea of when I think Illumina will start showing movements, because the Grail disposal is almost done and things should start picking up anytime now. So we are just waiting for things to unwind. It could be because there is this higher interest rate regime that's going on. Maybe the first rate cuts should do the trick. Let's go to the TradingView platform and I'll walk you through it. So here we are looking at the TradingView platform, and it's the Illumina chart that I have here in front of us. And as you will see, all these candles are one-day candles, and you can see that we have been steadily dropping all the way from 30th of January onwards. There was a little bit of a blip when the Grail disposal was announced. It's going to be, in my opinion, at that point of time, I thought that Illumina should turn around and start moving upwards, but that did not happen. We have been in a consolidation for quite a while now, and if I look at potential catalysts, the earnings are far away. It's on the 8th of August 2024. So when the earnings come, I think people may have an idea, people may look forward to get an idea of how Illumina has done in terms of its cost-cutting efforts, how it is looking in terms of its profitability situation, and its outlook. So that's a very important commentary that most of the investors are looking for. That could probably move in the right direction for the share price if everything comes out well. But the other thing also to look at is the fact that our momentum is below average, and it's continuing to move downwards. MACD is also moving towards the signal line in a bearish manner. So those two things do not look really good. We could have had a golden cross form out here with the 9-day exponential crossing over the 20-day exponential moving average, but they are very, very close to each other. The 20-day is still above the 9-day at 109.23, the orange line, and the 9-day exponential moving average is at 108.77. So the golden cross has not happened. So all of these exponential moving averages are weighing down on the share price. I'm just going to show you what it looks like in up close. You have a doji candle, a lot of indecision out here, and the price has been pushed down by the 9-day and the 20-day exponential moving average. There is a slight bit of uptick out here in the momentum, but I think that there is going to be consolidation. There is a long way to go before any catalysts arrive. So I'm hoping that the consolidation kind of builds a strong foundation on which the share price can pick up. Now, I want to also talk about briefly regarding interest rates, because I think interest rates hold the key to the fortunes of our genomic shares in our watch list. And the question is, when will the interest rates start going down? We have had rate cut by Switzerland, Sweden. We have had rate cut by UK, and EU already did a rate cut. So what is happening there is a differential that is taking place between United States and the rest of the major world central banks. And this is going to lead to exchange rate volatility. And what might happen is the US dollar will become cheaper. That is going to tame down the inflation. And that in turn can allow the Fed to cut the rates and bring the dollar back so that it's in sync with the rest of the G7 currencies that matter. Also elsewhere, there has been a big bank or financial institution in Japan, which has had a little bit of a problem. They sold, I think, $63 or $83 billion worth of US treasuries to cover losses. And this particular bank was kind of a cooperative. I wouldn't call it exactly a bank, but it's some kind of financial institution which was representing the interests of fishermen and a few agricultural bodies. And it's significant size, and those things are also going to have some impacts. So overall, I think we are looking at a situation where, because other central banks are reducing the interest rates, the US dollar becomes stronger, and when US dollar becomes stronger, the imports become cheaper, and therefore the inflation goes down. And the other side of it is that because the US dollar is stronger, the exports become more expensive. Therefore, the sales might drop, the export sales might drop, which in turn might lead to layoffs and cost-cutting measures, which can show up in the ADP employment statistics, non-farm payroll, and all that stuff. And all of that could enable the central bank to reduce the interest rate. So that's what I'm thinking. When will that happen? I really don't know. I'm looking forward to all the signs. We'll see it in the economic data. And if the economic data from the previous month gets revised downwards, that could also add another catalyst to this whole process. So let us say this is now June. If 5th of July or something, we hear data that shows all these things that I spoke about moving in the right direction, then the Fed may come back and talk about a rate cut. Probably by September we should have a rate cut. That's what the market believes, maybe earlier than that. So when that happens, I think most of these genomic companies will all start raising, and some of the biggest beneficiaries out there will be CRISPR Therapeutics and Illumina and potentially PACB and Bluebird. These are all the companies that might benefit. Ginkgo Bioworks also might benefit to a certain extent. So that's my thought process, friends. I would like to hear from you what you think. Please put it in the comment section below, and I like to read your feedback, and it helps me to get more informed. With that, my friends, I'd like to bring this video to an end, and I'll catch up with you again in the next video. Bye for now.